Well, it looks like that weekly chart was able to curl up with all those divergences as we were telling you that someone knew something that you don't. And we actually have something fun to tell you. And we're going to go talk about Bitcoin just for a split second to tell you guys about that certain someone who might have known something that you don't right before the information came out on Friday. But today we're going to have some fun. We're going to get into part one, try to briefly talk about the daily timeframes and the weekly timeframes to just show what's going on there, what to expect over the next coming months. And then we're also going to go into those shorter timeframes. But the fun part about the VIX for now is it was up by more than 31 or by over 30%, which if you're up by more than 20%, hey, if you're up by 10%, you have an 85% chance to bounce in the next two trading sessions. But we are up by over 20%, which means we have a 95% chance to bounce over the next two trading sessions. And we have a certain someone talking on Tuesday that I think you need to be aware of. And we're going to tell you about that once we get to volatility. So let's get into it. All right, guys, first thing to acknowledge here is congratulations and thank you so much for being subscribed to this channel. Thank you so much to my Patreon members and thank you so much to everyone who is really paying attention to this trap number 3 and paying attention to the updates around it as we get those good confirmations the day before. Not with the price action, but with the MACD and RSI. Ooh, not the best ones. But we did have those shorter time frames we were looking at, and we're going to get into those in a moment. But for now, we do see a dramatic down day here. We get the confirmation and something to look forward to, right? Let's talk about the macro scale, as everyone does talk about a crash, right? A 50% crash is coming because of some tariffs. Most likely not. Most likely we are going to see us come down into these type of areas and it will be the weekly pullback. I just wanted to put that out there because I know a lot of people will be discussing a major stock market crash, and it is possible. I'm not going to say it's improbable. It is less probable. Like once we get to weekly charts, you'll easily understand why it's less probable, but we have to see the market prove that. Overall, what we are going to look for is most likely a divergence on the daily scale or a higher low, just like we did over here on the daily scale, right in this box over here as we test these levels. This means that the market could come down, aka the SPY could come down to a level of about 575.49 before we are able to head in that upward direction. So this is an important part here where if you are bad at trading high volatility, you notice you buy bottoms when volatility is really high. They really manipulate your mindset to think, oh, we're going to crash down further, and you don't understand these weekly and monthly expected moves. Guys, that's why I put the course out for $100 this week. Everyone just thought I was willy-nilly putting it out there. No, I saw some bad things with this trap number 3. Trap number 1 came, trap number 2, and then once we had to fake out for trap number 3, we didn't set up that top in September, but we leaked it higher into October. That's where you can see, and you heard me saying in September, if they want to leak it higher, we can see something even worse. And so now we're seeing that worst thing come in, very aggressive move come in, as we discussed in September, if we want to leak this higher. And now things could get more difficult to trade if you are bad at trading in high volatility markets. This is going to be somewhat of looking like bear market volatility for a moment here. So if you want to learn, it is very good to just humble yourself and admit, hey, I'm not good at trading those high volatility markets. Maybe I need to learn a little bit. The full technical analysis course is down there for $100. It's going away this weekend. We just put it up for sale this week because I saw these bad things coming, and I overall wanted to give people the benefit of being able to learn instead of having to wait all the way to Black Friday. So make sure you get it this weekend if you are interested. But the daily divergences here, all they added up. Thank you to the Qs. We will shout out the Qs very loudly here in a moment because thank you to the Qs for telling us about trap number 3 that was going to come. Fantastic. But what does this mean for the overall market? Are we actually going to see a 50% crash? It is very, I don't want to say very. It is most likely, the most likely situation here is what? Well, look at the signals, right? We've shouted this out when we were talking about September and things like that. We said what had to happen in order for the actual like crash type look to happen. We had to make divergences and things like that. Okay, we had to make divergences on the weekly scale. Do we have divergences right now on the weekly scale? You just don't. You have a lower point on the MACD for your RSI, maybe, but you don't have that, you don't have that for the MACD. So this is very likely just to be a weekly pullback. We come down in these areas towards maybe December or late November, and then we're able to curl up and actually head higher into 2026. I thought as these YouTubers and people like that are going to be so excited to pump out, hey, this is the moment, this is the 50% crash. I wanted to be the voice of reason here and telling you guys how the charts are actually, not just their opinions and things like that and their excitement with how big the down day was. You guys look at the weekly chart and tell me how much room there is on this MACD between it and the center line. Do we have the signals for major crash? No, we don't. So in order for the market to really prove to us that it's going to crash, we are going to have to confidently take out the level of 575. We are going to have to get some kind of bounce that rejects and not make a divergence down in here, but instead take out this low. We will have to take out this low of 482 to really know like, hey, this is that aggressive. And that's the truth of it. Until we do that, we can literally bounce from anywhere in here. But I would just suggest this. When does crash actually become more likely? When you lose this red box. So I would highly encourage you draw that red box up and understand that the more likely scenario here is we're going to come down into that price point of about 595, 600, and then we're just going to curl up into positive territory. That is the most probable thing. And then we are most likely to go for maybe even 2 more pushes into 2026. So I wanted you to be aware of that, as you are probably being flooded with people very excited about a stock market crash. Let's go over to the Qs. First of all, I want to say thank you to the Qs on the daily time frame. See, you see we have the zone up already for you. So that's very nice. First of all, for the Qs, we are going to give you guys weekly expected moves. We're going to give those completely for free for the SPY and the Qs, okay, for the week ahead. So you are prepared for where the market would likely bounce from. And the Qs, you can't see the bottom side because it's really close to somewhere very important. So we'll talk about it. But the Qs were very nice to us right in here. We didn't have that little divergence point. We actually wiped it out on the RSI. So what did this tell us back here? When we wiped that out and we saw this downturn and a lot of people were saying crash, we're like, it can happen, but the most likely scenario here is we're going to set up more traps to the upside. And that's where we started to talk about traps, I believe 2 and 3. And so in this area towards the end of December or September, we were overall like, hey, thank you to the Qs, and especially thank you to the 2-hour MACD. I believe it was the 2-hour MACD that said, hey, we don't have divergence here. We have to at least go make that before we're able to do it. Actually, that was all trap 3. So it really just, Qs blatantly told us about trap 3. So thank you so much for paying attention to this information. I hope the Qs helped you like it helped me. So we do have a good confirmation here now. We actually have the divergence on the MACD and RSI. We'll still pay attention if this whips back up, right? We know this market has done some crazy things. We've seen big drops lead to more upside before, so we'll still update you if things change. But as it stands, we were looking for that right shoulder. Even on the SPY, we were looking for left head, right shoulder. We'll see if that comes to fruition with that potential bounce. That potential bounce because volatility was up by more than 20%, 95% chance to bounce. And we're going to tell you who is going to be talking on Tuesday. So you can be aware of it. But as far as it stands for the Qs, I just mainly want to talk about, is this a crash? Well, the last time that we saw huge volatility come in, right? Big volatility come in, we had a bunch of divergences. So I think it is much more likely that we leak this down into this area and we don't necessarily see this low taken out, but instead we see it as a regular pullback. You're just going to look across and notice there is no divergence here. There is, maybe you could count this as divergence, but it looks like a new cycle move. So I think that the most probable thing, and what the charts are overall saying, is the most probable thing is the Qs can come down and test this zone to make the left head and right shoulder that could have been. Meaning that the Qs really don't get risky until they lose 500. They can come all the way down to 500, curl up into positive territory, and everything is just fine. And it looks like we should be making new highs in 2026. I just wanted to put that out there. I'm not saying that this market isn't going to go through trouble. I'm preparing you and telling you what the reality of what these charts are saying, not just what these people want to pump out to get views on YouTube. I'm telling you the reasonable thing here, the most probable thing going forward, so that you can understand the next big trend move for the weekly might be down now for a pullback. But most likely by the end of the year, we're going to create those reversal signals, meaning we'll be looking for daily divergences and daily higher lows around these areas, just like we looked at the 2-hour higher low down here to see if we were turning to the upside. We're going to look for the exact same things because that is the most likely scenario. And if I get encouraged to believe that this is the big stock market crash, but I ignore a daily divergence, I can really hurt myself as a trader. So I wanted to put that out there. It is very likely that this weekly will get down by that center line, curl up into positive territory, kind of similar to what we did right over here, just probably a little less flaggy than that last time. So we'll pay attention to this as if it is having some bear market volatility. Speaking of volatility, let's go into it. Hey, who is talking? Why do we have a 95% chance to bounce because of the stats with volatility as it is of over 20% in one day? So we are very likely to see some kind of bounce, right? We're likely to see a 95% bounce in the next two trading sessions. That doesn't mean that the SPY has to go through the roof and bottom and go way up. No, it could just be a consolidative flat day that's barely green and then we fall again. But who is overall talking next week? Well, well, on October 14th, Tuesday, so two trading sessions, we will get Fed Jerome Powell. Now, I don't know what he's speaking about. I don't know what he's going to talk about. I don't know any of it. I just know that I'm going to be paying very close attention to volatility signals and the SPY bounce signals or the SPY dead cat bounce signals come Tuesday. I just wanted to put that out and have it in the forefront of your mind. As of right now for volatility, we have the weekly crossing up. Now, I really want to discuss this especially in the first part, because I know you're probably viewing a ton of crash videos and you're starting to get, right? It's starting to become your own narrative because you've maybe heard it so many times that you're like, oh, maybe this probably is the crash then. This probably isn't. It actually is a lower percentage chance that it is the major crash. Like I said, we'll see if it proves itself, and I'll update videos to show how it's proving itself. But just to say it, because we had one terrible day, it sounds like an emotional reaction to me. Okay, so I want to go in the past here for a moment. What is this right now? Okay, we'll get to that. As of right now, when did we see this huge volatility spike to about 63? Well, we saw it after we made 1, 2 divergence points that got really close to the center line. Then we got the weekly to cross up. So you had weekly triple divergence before that was able to show a big pop. Now you're going, well, this didn't have weekly divergence, but what's the difference here with the MACD? The difference here with the MACD is it's really close. It's even positive here. Right when it curls up, it's positive. So then we get 1, 2, 3. We get a boom up to a price point, up to a reading of about 60. So what's the big difference now? Well, we're negative, but we don't have divergence. We're negative. We are not curling up straight into positive territory. So that tells us that we have to be very aware of a lower high for volatility. It means that we are very likely, I think, to go to 36.11. And if people overreact, we can come touch these type of areas towards 50. But I think that we need to be paying attention to 2-hour or daily divergences up by 36.11, because the most likely scenario here is we are creating maybe the first point, and we are going to go up, make some kind of divergence point in 2026 and see that rocket up as we get to 1212. 1212 is the more likely area where a lot of people would be taken off guard. Notice the big volatility comes in when no one expects it. The big volatility comes in when no one expects it, and that is down towards 1212, and we most likely will have to get there. Me personally, I know the market likes to leak things out, so I think we could get this spike in volatility, see us base out towards November or end of November to December, see us able to drop down again to 1212, get a reaction, set up a small double bottom, and then we could see a top in this market in the middle stages of 2026 or going into the fall of 2026. Now, I'm going to be paying attention to signals, right? I'm going to be paying attention. I don't do things based off of what I think is going to happen. I do things based on the confirmation. So if I see a divergence confirm in the early stages of 2026, I will be paying very close attention. But the important part for you with this is look at the difference. Times where you crash, you create these type of signals. You curl up into positive territory right away. We aren't doing that. The positioning of the MACD is suggesting that this can be a bad little correction here, but it's not necessarily going to be a massive 50% stock market crash. We will see if we need to update that into the future. So let's get into part 2 where we get into those shorter time frames. So we already did the weekly one. Let's go into the 2-hour, right? Let's go into the 2-hour. Let's get you guys some weekly expected moves, maybe some daily expected moves for Monday as well. Fantastic divergences here. Love it. Trap number 3. Oh, just great. Okay, we see here 669.74 to the upside, 636.30 to the downside. We are outside of the monthly move with this. This is a very likely area to bounce from next week. But we said the left, the head, the right shoulder might need to be formed. So maybe right away on Monday we take care of that bounce, right? Maybe we just go boom, get a little bounce here, create that little tiny right shoulder. Maybe create a little 30-minute divergence, right? We'll see what happens there. But for the time being, that would just tell us we're either going to get continuation, and it's very likely that we are going to continue the moves down. Even when we do bounce, it is very likely that we're going to continue the moves down until we see at least a 30-minute divergence for a solid dead cat bounce, or a 2-hour divergence for an actual daily bounce potential there. So I just wanted to put that in your mind, because we do have the 2-hour that is negative. It is pointing straight down. It is oversold. So we can see a bounce here. But that being said, does the 30-minute chart suggest that we're going to just absolutely reverse around? No, it is extremely negative, extremely negative. No divergence, no higher low. In order to beat this high, you're going to have to get a 30-minute higher low again. In order to actually make a move to the upside that's significant, you are most likely going to need to create a 30-minute divergence before you're able to bounce. And I think that is very unlikely to take place right away after we just got this news. So daily expected moves for tomorrow, 659.87 to the upside. Well, for tomorrow, for Monday, 646.17 to the downside. If the 30-minute is able to bounce in some way, I would just watch out for these sellers towards 665. I think it is way more likely that we end up going down and then maybe starting to bounce going into Tuesday. Maybe we go up with Jerome Powell and then we actually end up failing those type of moves come Wednesday. We'll have to see. But as of right now, we have no reversal signal. So the big thing to get through our head this weekend is, yeah, the downside can continue. Why? Because we do not have any reversal signals even on the 30-minute time frame. Do you have them for the Qs? Well, actually on all of the, and actually let's go back to the SPY for a second, just talk about this. Remember we said that the way you can call this an actual like top, some kind of top for the weekly pullback, is if you take out this low. And notice we took that out. So now the right shoulder might need to be created. I just wanted to say that for a moment. The Qs have not taken out that level. That's what reminded me of it. But the 30-minute, does it have divergence? No. Does it have a higher low? No. So you're going to need some time here, and it's very likely that this move will continue. It's very, very likely that this move continues to the downside. If you get a bounce Monday, if you get a bounce Tuesday, it's very likely that it's going to continue, just so you are completely prepared for the market going ahead. Let's read off those weekly expected moves because they're pretty important here. We do see 608.94 to the upside. We see 570.06 to the downside. For Monday, we have 597.60 to the upside and 581.40 for your daily expected moves for Monday. This is a big deal, guys, because the implied volatility is increasing heavily here. So this is going to be a big moment. It's going to be a big deal. And overall, it means volatility is increasing. We are in correction mode. So we're looking for those good 30-minute divergences outside of those certain expected moves. And we're going to talk about those a lot on YouTube, but we're going to update you during market hours on Patreon. So if you would like to join Patreon down in the description, that would be fantastic. Do we have divergence or a higher low on the 2-hour or on the 30-minute? No. So can we get a 2-hour bounce? You always can, random news and things like that. But with this divergence, with the trap number 1, trap number 2, and then trap number 3 that we actually were prepared for, calling out that we were going to form a trap number 3. We formed the trap number 3. We didn't say trap number. Notice we did not say trap number 4. We've never said trap number 4 because trap number 3 was the very likely time that this was going to get really ugly. We said September. We were like, pay attention for this top. Oh, we're squeezing. We got to remake those signals. Pay attention for a top. And then we started to say in September, hey, if they want to leak this higher, as long as they can. That just means that when the drop comes, it's going to be more aggressive. And you can go back and look at that. But these 2-hour divergences need to be created for the Qs. So big thank you to the Qs. They are the whole reason that I was paying attention to a trap number 3. This MACD down here was the whole reason I was paying attention to a trap number 3. And the 30-minute even gave you the divergences in this near price action. So fantastic. Big thank you to the Qs. What does this mean going forward? We look for the potential for us to drop down, maybe do a daily expected move, get some kind of bounce, and then we will most likely end up down to 570. It looks like 570 as the monthly and weekly move are down there. It is very, very likely that we test those levels. So what are we overall looking for here? Well, we're looking for ways to continue. It doesn't look like we are going to get any kind of signal going into Monday. So we might need to create those early on in the week. Make sure you are subscribed. Make sure you are liking these videos so more people can see it. And make sure if you're not good at these volatile markets, if you're not understanding anything that I'm really saying, go check out the course down in the description. It will clear a lot of things up for you. And it's only $100 for this weekend. That is going away until Black Friday. So make sure to get it while it lasts. Let's go over to volatility. Volatility on the 30-minute. Now I'll show you something fun. Volatility, it suggests that this 5-minute divergence matters. Like look how steep that divergence is on the MACD, on the RSI. Okay, it suggests that we're going to dip down for the 30-minute on volatility, which would mean that most likely the SPY kind of sees some kind of bounce, some kind of upward move. That being said, volatility opens up at 2 a.m., right? At least my time. It opens up at 2 a.m. So that's before market hours. So by the time morning comes, you could already be down in these areas. Also, that's not even guaranteed. I don't trust 5-minute divergences. I just wanted to show it to you. What are we looking for volatility to tell us that some kind of bounce in the market is coming? You're going to look for a 30-minute divergence. 30-minute divergences have helped us so much, so much in volatility over the past few months. They have helped us so much. The 2-hour chart, as of right now, I don't think that thing's curling back down. I think that this thing will be like, oh, 30-minute divergence, we pull down. Oh, I just think it's not going to be able to hold those reversal signals with all the steam, all the pressure right now of downside. So volatility on the 2-hour is suggesting maybe a pullback can come. A 30-minute pullback would make total sense for volatility, but what does that mean? Only a pullback. So continuation is the very likely scenario here. It is very likely to continue in that downward direction. But that is why I wanted to seriously talk about the market on the bigger time frames, right? That's why I wanted to discuss the bigger time frames, especially the weekly one, because when you see signals like this confirm and people really want to get views, they're going to talk about these things like they are absolutely horrible, and they are bad. But looking at them with a professional lens, you can then see, oh, okay, it can be bad, right? There's always a percentage chance for that, but it is way more high probability to be a weekly pullback. So I don't want to sit there and convince my mind and my fingers that I need to be betting on a stock market crash when all I have to do is do my job and look for those bounces, play those high volatility bounces, play those high volatility continuations, and you can make a lot of money in high volatility markets. So I encourage you to check out that course down in the description, because I genuinely believe it can really help you out if you struggle in high volatility markets. I'm going to talk about one more thing for fun at the end of this video, because I talk about this all the time, how someone knows something you don't. And remember volatility. Remember volatility here on the daily scale. Why was I talking so seriously about volatility ever since this started to take place? Higher, low, higher, low, higher, low. I said, I don't care what everyone's saying. I don't care what's going on and what the narrative is, and we're going to hit 700. I don't care. Someone knows something you don't. Volatility had divergences. Volatility has a weekly that looks like it wants to curl up. And as the market is going up, making higher lows, so is volatility. And they know something you don't. Now, I saw this reported on Twitter, and I love to see it. I love the unusual whales and things like that, because they show you guys how people know things that you don't. The Pelosi tracker, inverse Kramer. These things are fun. They're memes. They're fun. You can use them. But also they tell you something that's very true about markets. Someone knows something that you don't. Did you know that a big Bitcoin account was made? I believe the day before yesterday. So the day before Friday happened, big Bitcoin, what am I trying to say? A big Bitcoin account was made. The first thing they did, the immediate thing they did, was take a massive short position on Bitcoin. So a fresh account comes in, knows exactly what's going to happen with Bitcoin the next day. You guys, this is why I say these things. This is why we use weekly expected moves. This is why we use monthly expected moves, because everyone is going to tell you something, and you have to have an edge that tells you what is actually probable. And something that is very clear to me is a lot of people still try to follow the news. A lot of people still try to follow this, try to follow that. If you can learn about these weekly expected moves, if you can understand divergence and you can understand how these markets actually move, you will do much better, and you won't have to watch any of even my videos out there. You can be good at this. Take that course down in the description. Get your journey started in understanding these weekly expected moves, these monthly expected moves, because they will give you a huge edge, while the news is telling you the complete opposite. I thank you so much for watching this video. I really do. I thank you so much for watching it. I thank you guys for being here, liking, subscribing, joining Patreon, taking the course to try to learn. I truly respect anyone who is admitting like, hey, I'm not that good at volatile markets, so I need to learn this weekend. I was the same way, and that is how I became a better trader. Thank you so much for watching this video. I hope that you and your family have a blessed weekend, and I hope you do something nice with your friends and family this weekend. I truly do. And thank you for watching once again. Have a great weekend and be reloaded for the Monday coming, because we will have a crazy market and we got to deal with everything that's going to go on to this sell side. All right, guys, peace out.